Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, and you can do so simply by purchasing our service package for a very small fee of $249 for a year's membership. You can purchase that package on our website. I'm going to leave our website link below this video in the description, so if you do want to join our amazing team, just simply scroll down now, click on that link, which will then take you to our website. However, in front of me is the crude oil futures chart, and as you can see today, for a second day in a row, we have had a pretty much large sell-off. I think this is 6 days this is 6 days trading in the red now in a row. Not very good for the bulls in crude oil. I am one of those bulls, but I look at this chart and I just see great value. For those who've been watching my videos now for the past couple of weeks, you'll know that I'm extremely bullish on crude oil. Demand has started to pick up within the US as the coronavirus numbers have started to get slightly better. I do realize that there has been a slight uptick in the past week, and I think that could be a potential reason why we're seeing the crude oil prices go down this week. But also it's because Iraq are now threatening to leave the OPEC group, which is not good news, because what could then potentially happen is that other nations then may threaten to then leave the OPEC, and it might have a dominoes effect on the OPEC organization. So, that's not very good. I think Iraq are just not very happy at this moment in time, due to the fact OPEC have put a production cut on, and a production cut just means less revenue for these countries. And I think Iraq are just starting to get a bit frustrated now, and now that's why they're now threatening to leave. So this is not good news for the crude oil, and hence that's why we have seen a big decline in the past couple of days. RSI is looking very healthy, currently at 40, so we are approaching that oversold territory. We're not quite there yet, but more importantly, look at the 200-day EMA. We got rejected from there at the end of last week, as you can see, as I'm just circling now on the chart. And now, more interestingly, we've now come into contact with the 50-day EMA, which is the red line on the screen. We're now testing that level. This is very significant. For those who currently have positions open in crude oil or looking to invest, I would keep a very close eye on this level, the 50-day EMA. If we get a daily close above it, then that's great. Then I would look for us to surge back up towards a 200-day EMA with the weeks to come. But if we get a daily close below the 50-day EMA, this could trigger a steeper sell-off back down to maybe even towards the $35 a barrel area. Personally, I have just put more money to work here. I put some money to work at around $41.50 yesterday, and I've just added some more money at that 50-day EMA, hoping for us to bounce back towards a $43 level. That's my price target at the moment. The signal team have now become buyers of crude oil. I am bullish long term and short term. As I mentioned before, demand is starting to pick up, and this lockdown and this global pandemic cannot last forever. Especially once air travel demand comes back, that will have a great effect on the crude oil market demand. I'm a buyer, no interest in selling. Great value at this